Welcome back to CEO Money. I'm Ed Baxter, sitting in for Michael Yorba, and today joining us right now is Eric, the Wolfman Wilkinson. Welcome to the show, Eric.
Thank you, Ed, for having me, and thank Michael for having me on as well.
Well, I've actually seen you on TV before. I know that's going back a minute, but I actually have seen you on TV with Rick Santelli before. Because my background is that of a trader, and one thing that stands out as far as your background is concerned is that I remember the first time I walked on the floor of New York Stock Exchange back in the old days, and I worked for a company that was a floor broker, and I remember how terrified I was, and that leads us into something that I think is very important as far as you're concerned, is the public understanding what they're up against when it comes to trading. Can you kind of talk about that?
Well, yeah, that's a great question. And, I still remember my first days walking onto the floor, too. I mean, just the energy you could feel on the floor there. And that excitement does translate into trading. And one of the things that that follows me the most when I'm trading is my psychology background. I actually started out trading in college with a psychology background and switched it over to finance, and then decided to move to Chicago to trade. So the psychology is a big thing, and I teach that in a lot of my classes, is you kind of have to separate the thought process of trading in correlation with money. And that's a big step for any trader or any investor as far as I'm concerned. As long as you can stay mechanical and think about like probabilities and having a set of rules that keeps you mechanical, then it kind of, you'll see that whole separation of the money aspect correlated to those investments kind of drift away. And I think that that's an important step for everybody. So I try and really beat that, into the ground, I suppose, with some people that I talk to or some people that I have in my classes, is you really have to reach that milestone of forgetting about there being money there. And it's really about probabilities of the trade working and staying mechanical, staying with what your game plan is by writing it down on a piece of paper, because you're more likely to follow that game plan if it's written down than if it's kind of in the back of your head. There's seeing too many people trading say, I'm going to get out of this stock at this level or this future at this level, and they just have that in their head. And when it trades to that level, they kind of, what we used to call, squeeze it a little bit further, and that's usually when things go against you. So I try and keep people from those pitfalls.
Eric, at ProTraderStrategies.com, I guess the one question that comes up is, when you think about the two things you combine, behavioral finance is really what you just described for the most part, as far as being a trader is concerned. Do you teach people the secrets of understanding how to control their emotions, through your courses with regard to when they do trade their own money in real time?
Absolutely, I try to do that. I teach options, and I know everybody can go out online and figure out how to buy a long call or sell a short call or do a iron condor, strangle, whatever you bring up. But at the end of the day, what I do is I teach the probabilities and what strike location one needs to get in to increase their probabilities of success. I kind of also correlate it to in Vegas, if you go out there and you're sitting at a roulette table or at a blackjack table, the odds are against you. And rather than being that person that has the odds against them, which a lot of traders do, you go out and buy a stock, your odds are 50-50, which are probably the best odds you can find in Vegas. But if you're an options trader, you can roll those probabilities in your favor. And in a sense, you kind of become the house where you are having a higher probability trade than you can basically find anywhere else. So I teach those strike locations that have that, best bang for your buck, highest probability, and still able to capture some premium, and when to get out of those. And my game plan is usually to get out of them a little bit earlier than most people would. I don't take anything into expiration in the last couple of days, unless maybe I have a long call that's, just not worked out and there's no sense in really getting out of it or anything. But I try and teach that and how to stay mechanical. For instance, if a strangle goes against you and you're tested on one side or the other, how to be mechanical and increase your probabilities of success with that trade by, say, rolling up the puts or rolling it out in time in different fashions. So I go through all of those steps, and I have a set steps and rules that you have to follow in order to implement a strangle or something like that. And a lot of that has to do with volatility, where the volatility is for that particular underlying.
Well, volatility is always my friend as a trader and as a notorious put seller, so I was really big into that. One thing that you do that's interesting is that you do offer courses and also a free trial for one of your courses in teaching people how to corral the options market. Can you kind of delve into that for us?
Yeah, as a matter of fact, we're actually starting out with a new course right now, and we're going to be starting tomorrow with long calls. And we're going to start out real basic, where I'm going to drill into delta and stuff like that, some of those Greeks that scare people away. And I'm going to teach people a lot of different aspects with that, what delta teaches you, the probabilities of being in the money. There's like 5-6 different things that delta can really teach you. So I'm going to go through that, and then all the way into more advanced strategies like the strangle, the iron condor, and things of that nature, the broken wing butterfly, and we'll break everything down in simple segments. So even starting out with this long call strategy, an investor that's been in the markets for 10, 20 years may think that they know everything about options. I'm going to be teaching it from the floor trader's perspective, because I think that the floor trader had some really valuable insight that the broader market doesn't really talk about, especially on Google and things of that nature. Or you can look up online what the right environment is to get into a trade, because we didn't always have the right environment. We had to do a trade when somebody asked, what's the market on this, and we had to kind of get ourselves into it. So we know from experience when the wrong time is to get into those trades. And that's the beauty of being online, is you don't have to take a trade necessarily. You can kind of pick and choose when and where you want to do that. So in these courses, yes, I do that, where I go step by step, teach, when is the right environment, what's the right underlying. A lot of people have heard of Monsanto and Aon, and those are great stocks, and you can easily get in and out of those stocks. But when you're talking about options, I have some specific rules about the option montage and what it's showing you, whether or not you should even trade that particular underlying. So I go into that even minutia of a detail, as Aon's not maybe the right stock to be trading.
You kind of need it. The one thing that stands out, obviously you've done a good job with that. Eric, we're about out of time here. I want to thank you for educating me even after my trading time, and I want to thank you for joining us today. And I look forward to talking to you again about ProTraderStrategies.com.
Absolutely. Love to be on. Love to chat with you guys more.
Perfect. Thank you very much. You've been listening to CEO Money with Ed Baxter, sitting in for Michael Yorba. We'll have more great content for you tomorrow. Thank you.